shares of United. Stock is down quite a bit on the back of lower Q4 guidance, though third quarter earnings and revenue were above estimates. Joining us now is Connor Cunningham from Melius Research. He has a buy rating, $63 price target on the stock. Mixed bag here, Connor, but a big part of the story of the quarter reported seems to be their ability to charge more for planes that aren't nearly as full as they were a few years ago. Does that balance out this disappointing guidance?
So thanks for having me, guys. I appreciate it, John. I think that the revenue outcome in the third quarter was actually pretty exceptional. I actually saw a quarter-over-quarter improvement in domestic trends. When you look across the industry, we're seeing a lot of discounting. So the fact that United's able to kind of weather that is quite remarkable in the context of what's going on. So, I think a driver of that right now is really premium services are doing very, very well. And really just overall international trends are also quite strong too. So still a lot of potential for United as they work through their next plan. But from a revenue standpoint, still looking very good. I think the issue that you're looking at in terms of the fourth quarter, fourth quarter cost looks a little worse than what we were anticipating. I think part of that has to do just with underlying maintenance expense that's been a real problem throughout the industry. There's also been a bunch of capacity adjustments that need to happen, from the issues in terms of the ATC in New York and just what's happening in Israel. So, at the end of the day, I think that this report's pretty solid in the context of a pretty uncertain environment. So United and Delta, I would say, continue to kind of distinguish themselves within this group right now.
All right, how do you factor in the geopolitical risk, whether it is United Airlines or the other carriers? And I ask that because obviously you've got fuel, which has just been and the rise in fuel prices has been a huge impact on United, and also we saw it with Delta last week. And then to your point, Mideast uncertainty.
Yeah, it's obviously tough for them to navigate in the near term. What I would just say for Israel, for example, for United, it's only about 2% of their overall capacity, so not a huge portion. But the ripple effect from potentially higher oil prices could obviously hurt them. What I would say is that if oil does move higher, historically, what the airline industry has had to do is make adjustments on supply. So if you want to offset or recapture higher fuel, you're going to have to do it with pricing actions. And so in the current environment where there's a lot of capacity, would force a lot of these other players to potentially make an adjustment, which wouldn't necessarily be a negative thing over the long term. My view, or our view at Melius, is that there's too much industry capacity right now into 2024, and there likely needs to be an adjustment anyway. So if fuel is the near-term headwind that has to that kind of makes that Band-Aid need to be ripped off, then so be it. But from our standpoint, United again continues to kind of to weather the storm a little bit better than most.
Okay, quickly, stocks down 4%. Buy the dip? Yes or no?
I would probably be a buyer of the shares. I do think that long term United does have a tremendous amount of potential with their current plan.